Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to be notified each time one comes out. This is my weekly thoughts on market happenings for the week ending November 26, 2021. The indexes for the week were doing really well right up until Friday morning when we had some news which caused the market to tank for losses for the entire week. In other news, Jerome Powell got renewed as Fed chairman on Monday for a second term. The market liked this because you're not changing the captain in the middle of the storm. Experts view this decision as a market positive, especially for banks. The markets have been comfortable with Powell and have considerable confidence in his leadership, especially given his stewardship through the COVID crisis. There has been a release from the U.S. Strategic Petroleum Reserve. That release landed early November 23rd as U.S. President Joe Biden announced the release of 50 million barrels from the Strategic Petroleum Reserve. This is QE equivalent of printing oil and should augur really well for prices going forward in the medium term. In the short term, it's a political move to try to lower gasoline prices, which is where people are feeling the most impact. Since the amount in the strategic oil reserve is fairly small, the impact on gasoline prices is likely to be insignificant. The U.S. government said on Wednesday that initial jobless claims fell to 199,000, the first time below 200,000 during COVID, and a number not seen since November 15, 1969, when claims totaled 197,000. A revised third quarter GDP advance of 2.1% was slightly above the previous reading, but it was slightly below estimates. And in the US, the October durable goods orders fell 0.5%. Economists expected a 0.3% increase. Rising inflation and the expected rising interest rates are seen as bad news for high growth stocks as they make future earnings less appealing, but the size of the recent moves means that some of these declines may be reaching their endpoint, said Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. You don't really want to have long dated assets. You don't really want to have high multiple growth stocks in that kind of environment. All this being said, some of these high growth stocks are down 50, 60, 70%, end quote. The big news of the week is that Omicron variant of COVID-19 showed up in southern Africa with about 100 infections, coupled with lockdowns in Europe, including Germany's quote of vaccinated, cured, or dead from the health minister. Friday was a sell-off in everything from stocks through oil and Bitcoin. There have been increasing cases in Europe building up on Delta variant, and a new variant put people into panic mode or profit-taking mode in the thinly traded US Thanksgiving market. Pfizer, who said they could adjust their vaccine in 100 days to counter the Omicron variant, was one of the few stocks up on Friday. The selling affected travel stocks and oil stocks significantly, possibly pricing in the worst case scenario. The travel stocks were looking good after the Thanksgiving travel. The COVID resurgence may now allow central banks to pause their tapering of bond purchasing and/or interest rate hikes. Next week, Canadian banks are reporting their quarterly results, and dividend increases are expected as well. The US has payroll data, and both Canada and US have unemployment data on Friday. That has been the past week in review. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.